Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, we got the stock market, right? And right now there is massive complacency in this marketplace. This market, well, it's starting to go down, right? The Dow has already peaked. It's starting to come down. The Russell, which is the small cap, it's already peaked back in November. It's starting to come down, but they're still trying to push the S&P, to push the NASDAQ up higher. That's where the Magnificent Seven stocks live, right? And they're trying to push those up higher, but you have such a small breadth of stocks, only seven, actually about only five now, that are holding the market up before it comes crashing down. Now, people, they're just ignoring risk. Now, what is the risk? The risk is that the Federal Reserve won't come in and bail the markets out. Maybe they can no longer bail the markets out. Now, the Fed, they raise rates from basically 0% to 5.25%, right? And they even cut back on their balance sheet. Now, their balance sheet's what they go out and purchase, right? Got up to around 9 trillion, down around 8 trillion now. Cut $1 trillion off of that. Rose interest rates 0 to 5.25. But here's the thing. They cannot figure out why there's still inflation, why inflation won't go away. Now, the Fed, they had to lower rates, right? Because things were starting to break. Silicon Valley Bank, it broke, and a lot of other banks were going to start to break. And that's why the Fed has to lower rates. They can't raise rates high enough to conquer inflation. But the real reason they can't conquer inflation is because of government spending. You see, they're raising rates, they're raising them up to 5.25%. They cut their balance sheet, cut it by $1 trillion. But the government, what's the government doing? They're still spending an extra $2, $3, $4 trillion a year that we don't have. You see, government spending is the problem, right? They're going out and they're spending, let's just say they spend an average of an extra $3 trillion, right? 3 trillion more than we have. And that doesn't take into account the unfunded liabilities, which are going up by about 3 trillion a year. So that's really 6 trillion a year. And you wonder why inflation won't go away. Well, it's because of the government spending. You see, 70% of all the stimulus that's out there is the government spending. Now you go, but Mike, we got Elon Musk coming in. He's got the Doge boys. He's going to cut all the government spending. Well, maybe he will, maybe he won't. But here's the problem, right? Here's the problem. He can't touch Medicare. He can't touch Social Security. So what does that leave it? Okay, maybe he cuts the defense budget. But if he cuts everything else, we're still spending over $1 trillion a year that we don't have. Now, why is this unsustainable? Well, eventually the debt just gets so big that the interest on the debt takes all of the tax revenue that comes in. Right now, it's going to take about 50% of every dollar you pay in taxes is just going to go to pay the interest on the debt. You see, we're at the point of no return. There's really no way out of this. So this is the problem that we're faced with right now. Now, inflation is not going away. And inflation, it really is just a way for them to steal your money, right? Now, they want inflation at 2 to 3%. That's what they tell us. Now, you do 3% a year for, let's just call it 10 years, right? Okay, they've wiped out a third of your purchasing power. Is that really what you want? I don't want that. Why do we need inflation? Why not bring it down to zero? Why not go back to sound money where it would get rid of the inflation problem, because then they couldn't print the money. You see, inflation's just a way for them to steal your money. It's a way for the rich to get a lot richer and the poor to get a lot poorer. Now, we talked about this last time. 70% of people in the United States are living paycheck to paycheck. Why? Because they don't have any money. Their credit cards are maxed out already. It's a big problem. We got a big problem to face. There's going to be a reset. I don't know exactly how that's going to play out. But let's start talking about, well, the housing market. The housing market in 2025, right? Now, I say the housing market's on very shaky ground. Now, you could listen to, I forget his name off the top of my head, the head of Redfin, right? I was listening to the podcast that he was doing, and you would think that everything's looking great for the real estate market. I mean, sales are going to be booming in 2025. according to him. That's not my take, right? You see, now don't get me wrong. Don't get me wrong. A lot of people think I don't like real estate. I love real estate. It's been my life. I'm a real estate broker. I make my living selling homes. But here's the thing. Right now is a terrible time to go out and buy real estate. Why? Well, because it's unaffordable, right? It's unaffordable. It's taking about 40 to 50% of your gross income just to make the expenses on your house, including mortgage, property taxes, insurance, and all the other expenses of the upkeep of the house. 40 to 50%. That's insanity. Prices. See, there's two ways we can solve this problem. And there's only really two ways we can solve this problem. Okay, one is house prices come down by about 50%. Now, I keep saying they're dropped by about 40%, but because 40%, you're reverting back to the long-term average. Long-term average is going like this. 40% you're reverting back to. It's called reversion to the mean. We always revert back to the mean. And usually we overshoot to the other side, whichever direction it's going. So when we come down that 40%, we probably will overshoot 50, 60%. It's very possible. But you see, there's a problem. You see, there's two ways out of the problem. One is that house prices come down. Now, the other way is everybody's income in the United States could double. It could double, right? It could double. Let's say you're making 100,000 now. If maybe next month you start to make 200,000. Is that going to happen? Probably not that realistic. I'm betting that the house prices come down. Now, if everyone's income doubles, then we've solved the problem. Then houses have become affordable again. But right now, they're just not affordable. Now, you see, you got the people my age bracket, right? We got the baby boomers, and we're going to be selling our houses, our McMansions. I don't have a McMansion, but a lot of people do. And they're going to be selling them, right? And the millennials and the younger generations, they want to buy these houses, right? But they're in no hurry to spend 40 or 50% of their income to buy these houses. They're just in no hurry to do that, right? Because it doesn't make sense for them. I mean, they're going to stay in their parents' basement. They'll stay in that first 900 square foot starter home. They'll continue to rent the apartment before they go and spend 40 to 50% of their income. Now, it's hard. It's difficult, right? And now, if you're in my area, I live in the Bay Area, San Francisco Bay Area, costs about half to rent as it does to buy. It costs twice as much money to buy a home than it does to rent a home. And now this could explain some things. In San Francisco, house prices are already coming down. Now they've dropped about 15%. Now I know a lot of people that have recently purchased homes there, paid $2 million. They've already lost $300,000. No problem. They put $400,000 down. Well, they still got $100,000 in equity. Well, not when they go to sell that property. That equity will get wiped out in closing costs and other fees. But so they basically lost all their money. They would have been better to wait a year, 2 years, and they would have saved $300,000 or $400,000. Now, if they continue to wait, now I say it's still on the way down. Now, there's a lot of places are coming down. Now, in Florida, prices are coming down. Why are they coming down, Florida? Because inventory has tripled, not doubled. Inventory in Florida has tripled. The amount of inventory that's being dumped onto the marketplace has tripled. Now, part of this is problems with the insurance companies. You cannot even get insurance on these homes in Florida. So they're really hard to sell right now because people cannot get insurance, which means they cannot get a loan to buy these homes, which is why the prices are drastically reduced. Now, places like Austin, Texas, down already 20%. And Texas is coming down, right? Florida's coming down. California's just starting to come down. Bay Area is really starting to get hit pretty hard. It's kind of interesting. I sell homes here, and the homes that I sold just this past year in 2024, I could not get the people the price that I got for them. They'd be down about $300,000 already from the prices that I just closed these homes on this past year. Now, I do plan to close some more homes in 2025, but they will be at a lower rate. It's now the race to the bottom, right? We've had this stair step up, but sometimes the elevator comes and takes us downward. Now, I know that guy, the head of Redfin, he'll tell you the exact opposite. He'll tell you everything's rosy, everything's sunshine. People are going to go out there and they're going to purchase homes because there's such demand. You see, and he's right. The demand is probably really pent up, right? Because for the last couple of years, we've been at the lower end. I mean, we've been selling, 4 million homes a year. Now, it sounds like a lot, but that's like, you have to go back to 1995 to sell that amount of homes. Now, I don't know exact population, but there's about 25% less in our population in 1995, and we're selling the same amount of homes. So there is a lot of pent-up demand. A lot of people want to get out of their starter home, but they're stuck. They're not going anywhere. They can't go anywhere. They're locked in 2.8%, so they got to stay cramped in that starter home. They got new kids on the way. I know some of these people. They're living in, they want the bigger house, but to get out of that house and into the next house, they'd lose their 2.8% rate and they'd have to pay 7%. And plus the prices of houses, well, those big houses are still expensive. Now, when they start coming down, everybody will be a free fall all on the way to the bottom, right? Everybody will be there'll be a fear of not getting out, right? There was the fear of missing out on the way up, and now there's going to be the fear of not getting out on the way down, right? Because that's just the way that the market works. It goes in those, boom bust cycles, and right now we're heading to the bust side. Now, a lot of people, they think that the market's going to continue higher. You can listen to Dave Ramsey. You can listen to Barbara Cochran. They'll tell you the market's going to double from here. They'll tell you this is the best time to go out and buy. And I'm a real estate broker. I'm supposed to tell you it's always a great time to buy if I got a house for you, right? Because then I'm talking my book because I make money. Dave Ramsey, he's very invested in real estate, hundreds of millions of dollars tied up. He doesn't want that coming down. Barbara Cochran, the same way. Her empire's built in that. She's got to talk her book to get it up. Now, I'm a real estate broker. I should be talking my book, but I'm telling you, it might be a good time to get out, right? And that's all right. I mean, I deal mostly with sellers anyways. I'm not looking for the buyers anymore. I used to work with buyers, but August 17th last year, they took away the buyer broker. We don't want to work with them anymore because it's harder to get paid. I want to work exclusively with sellers now. And those sellers, I charge them, and if I represent the buyer, I charge him. So my pay has kind of gone up over the years, which is kind of interesting. You see, a lot of the regulators that are watching this are very puzzled by it. They expected the commission rates to be coming down, but commission rates are actually floating up higher. You see, this was a very bad decision for the public. The public is getting screwed again. It's just the way it worked out, right? The lawyers won. They got a third of the settlement, and there's going to be a lot more lawsuits when the buyers have to represent themselves because there's really not many people that want to work with the buyers anymore, not many real estate brokers. Yeah, you get the fly-by-night, so I don't want to say that Redfin's a fly-by-night. They'll work with the buyer, right? And because they're just I guess they get paid just on a salary basis. They're not really on commission basis. They're a company where they have lower rates, and you can go ahead and use them, please. Absolutely, I want to give them some business, right? Maybe that's a way you can save some on your commissions, but don't expect the service you get. Don't expect a knowledgeable broker, which is worth his weight in gold, in my opinion. Other people, I'll get the haters in the comment. Oh, they hate the real estate broker. They hate paying that commission. And that's good because I really don't want the business anymore, trying to retire. But that's just the way I'm doing it. But my love for real estate is still there, right? But I do not think that now is a good time to buy. I just think that's a good time. Sit back, grab the popcorn, watch the show, because the show is getting exciting, right? Show's getting exciting. The Fed, we can see that they've lost control. They keep lowering rates, and mortgage rates keep going up. You see, they were telling you that, what is that? I don't know. Buy the house, date the rate sort of stuff, meaning your rate's going to come down. Buy it now, pay the 7-8% mortgage rate, and you can refinance later. The problem is they're not coming down. Problem is they're going up higher, right? And they can't figure out why. But why? Reason is the Fed's lost control. They keep lowering it. Now, take my words, when this market starts to come down, the market will start to come down. We're entering into a bear market right now. I mean, it's pretty obvious. Well, not to you, the moon boys. The moon boys think we're still in this bull market for another 5 years. That's what they're telling me. They say we're going to go to 2030. We're going to crash in 2029. That's what they're saying. I mean, maybe they're right. I don't think they're right. I think that we're starting, the bear market is already starting in the Dow, already starting in the Russell. I think the NASDAQ and the S&P are going to join after this month. I think they'll probably top out this month and then start coming down. But once they start coming down, you're going to see the Federal Reserve. They're going to do emergency rate cuts. Emergency rate cuts. I'm not talking about a quarter basis point. I'm talking about 50 basis points, a whole 100 basis point rate cut, maybe 200 basis point rate cut if we start to crash hard. You see, because they're trying to save everybody right now. But there's a problem. There's a problem. They can't save everybody. It's too late for that. You have to let this flush out. It's going to flush out because the market is actually bigger than the Fed. The Fed thinks they're bigger than the market, and that's where their arrogance is going to get them into trouble. Now, if you like this stuff, give me a thumbs up. I'm Tall Mike. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.